Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and we begin another trading week. This week's show is going to be brought to you by the folks over at TrendSpider. I'm happy to announce that they have launched their mobile app. I've been waiting for it for a long time. It's outstanding. So take advantage of their special discount tonight. They're giving away, I believe it's still active, a 45% discount, unless it's ended. Did it end? Check their website. It may have ended. It may have just been a brief launch. If you can't find a 45% discount code, you get a 35% discount code with the Contrarian Trader. Automate your grunt work, speed up your technical analysis, and improve your accuracy by using TrendSpider. And time your trades with precision using their alerts. So take advantage of it. Let's get to, first let's say hello to people. I saw Franklin on earlier. Where's my mouse here? There we go. Franklin, Bob, I trust you had a good weekend and it's slowly getting back to normal. Yeah, we took some time. My wife and I went out to the North Fork wineries for a couple of days and just chilled, had a great time. Yeah, we're getting back to normal. I think that this week we'll be back in full swing. Earnings week, as you can see behind me, earnings week is going to be opening up this week. We're going to talk about that in a moment. Prashant, it was good. Still concerned about Delta headlines. Okay, Mr. G, greetings to you, sir. Falcon, hey, brother. Jody, hello. All right, let's get to it. Let's bring up the pre-market activity. What we're going to go over, the futures action, not the pre-market. What we're going to go over is the futures action this evening. We're going to go over what we normally do every Sunday, which is the valuation of the market as measured by the Shiller-PE ratio and the Buffett indicator. We're going to talk about earnings. Earnings begin in earnest, pardon the pun, intended, this week. Then we're going to take some chart requests. And if we have some time, we're going to circle back and we're going to go over how the futures are settling down. Let's begin first with what I'm most interested in, and that is the U.S. dollar. The dollar, last tick, 92.126. We are below where we closed out the session on Friday. Although it looks like we're up, we're not technically relative to the close on Friday. Let's go to a 4-hour chart, get a feel for how we closed out the week. All right, so they're trying to hold the lows of Friday after the market closed, though. Let's take a look at gold. Gold down $2.30. The key to keep in mind here is with gold, that gold remains in a trading range. We had an inverted head and shoulders set up, left shoulder, head, right shoulder, neckline broken. Now we're looking for a stair-step move higher on gold. Silver. Silver down slightly, 0.13%, holding support. Nothing major to report here. Staying on with commodities for a moment. Natural gas. We're very bullish on natural gas. Nat gas flat on the session. Hey, Big Bear. How you doing, brother? Eric, hello. How do you think the Russell will perform this week? It depends upon yields. If yields pop up higher, we're going to go to the bond market in a moment. You'll probably see a rally in the small caps. We have CPI coming out this week. That could influence yields. Economic data in earnest could influence these small caps. They're very sensitive to economic data. So I still think they're very, very extended on a monthly time frame. And so far this month, we're down on the month. Well, they're down on the month. Jennifer trades. Russell going up this week with bank earnings. Maybe not this week, Jen. the money center banks come out this week. The following week, you have more of your smaller regional banks that announce. Hey, Danny, hello. Matt Carter. Well, you could be right for all I know. Staying on with commodities for a moment. Copper consolidating nicely, 4-hour time frame. We're up on the session. Corn. Brutal week last week. Down on the session. Wheat. Brutal week last week. We continue to drop here, down 1%. Where's my light sweet crude? Crude struggled a bit last week. We're up over 1/3 of a percentage point. So crude looking strong, 4-hour time frame. Let's circle in and take a look at the equity market. The Russell 2000 up 0.14% at current. After a brutal Tuesday, Wednesday, bounce back on Thursday, we are at current trading back above resistance. Does it hold? We don't know. We're not that smart. We'll see whether or not we close here. Do we retest it? Do we hold? Do we get a continuation breakout? The market's going to tell us what direction the Russell's going to take. At current, looking promising. The NASDAQ 100. Up on the session, nearing resistance. Up 0.12%. The S&P 500, here it is. We have new highs, new weekly highs already this week. And we are up 0.06% on the session. What I will point out here is that we were putting in lower highs on RSI, but we did break out above it, so this may have been negated. Not much to talk about. Bonds. So bond prices are fairly flat. The 10-year yield was annihilated last week, but we saw a nice bounce back off the lows of the session. RL, hey brother. Yeah, if you take a look at yields and how we closed out the week last week, this is a bull flag setup. Now, earlier in the week, we were trading down below this lower band of support, but by the end of business on Friday, we had rallied off the lows of the week to close back above support. Frankly, I think that yields are in all probability going to head higher from here. Daily chart. Could this be a dead cat bounce off the 3rd standard deviation Bollinger Band? Quite possible, but Stokes hooking up, RSI hooking up, and believe me, I'm not completely excited about it. It'll be great for a short of the Qs once you see the yield go past 1.5%, but that's a good ways away. But rising yields are going to be viewed as strong for economic growth. That'll drive the small caps up higher. So it's kind of a double-edged sword. Unless, of course, the markets believe that inflation is a major problem and the Federal Reserve will not act, and that's going to be a problem for the markets overall, because you're going to have market forces begin to take over the pricing of long-dated treasuries, 10-year, 30-year. And the Federal Reserve is not going to like that. The U.S. Treasury just issued over $1 trillion worth of bonds and notes in just the past 4 months, Largest amount. Agreed. And they're going to be issuing more. There's only more to come. Yeah, the Federal Reserve is paying lip service and jawboning. They did a good job. You have to admit that the Federal Reserve did a good job in convincing the markets that they're really serious about raising rates at some point in time in the future. I don't believe it. I don't think that they can. Think about what if they ever normalize the interest rates. Could you imagine what our payments on our debt, the interest payments on our debt alone would be if they ever normalized, let's say to 5%, 5.5%? It would probably be just the interest payments alone would be the equivalent of the national defense budget. Just the interest payments. That's insanity. So they can never let that happen. That's why they need inflation. They want to inflate away the value of that debt. Just like we did after World War II. We're going to go over Goldman Sachs. Goldman Sachs, we're either going to be trading Goldman Sachs this week or JP Morgan Chase. I haven't decided yet. What we'll be doing is what we normally do during earnings season is using a options trading strategy called a short strangle. So what we do is we sell a deep out of the money call option and we sell a deep out of the money put option and we generate cash flow, but we do our analysis in advance. I'll show you what we kind of do. I post this in the members area. Here, we did this with Nugget. Here's the trade alert. This is actually out of my account. And here's the analysis that we do, the probability analysis of what are the probabilities of the put options or the call options trading in the money. And if we think that the odds are favorable, then we'll execute the trade. So what we'll be looking to do is, on average, I did some analysis from last earnings season. We try to go about 1.3 standard deviations beyond where the shares are trading at current. So the probability of the shares trading in the money is highly unlikely. And we try to take advantage of what you call implied volatility crush. Because right before earnings are announced, you have traders that are just buying up options. What drives the value of an option? It's demand for the option. So you have all these players out there trying to hedge their portfolios or trying to speculate by buying options in advance of earnings. But then the next day, after the news is out, the value of the options decline. That's why we don't buy the options. We sell the options, and then we just book our profits the next day. Moving on. So that's the game plan for this week. All right, so we went over futures. It's all about bond prices. That's what's going to drive the direction of the market. Let's take a quick peek at this is a good article. I'd suggest everybody take a look at this video from Kyle Bass. It's about China. All right, so we begin the week. The Buffett indicator, the stock market strongly overvalued. And I usually say that they got to update this chart because we're at about a 3 standard deviation move. We were beyond a 3 standard deviation move. We've pulled back to only a 2.8 standard deviation move beyond historical norms. Now, here's the footnote. I read this every week. Values greater than 2 standard deviation be above historic trend occur only 2% of the time. We've been above 2 standard deviations since, I think, November. Where is it? Yeah, here it is. November 2020. In terms of the Schiller PE ratio, we go into the week with a PE ratio of 38.36. So historically, on both a Buffett indicator model Schiller PE ratio model were very, very overbought. Excuse me, very, very expensive. Bust the stacks. It would be devastating. A half percentage point rate hike, no doubt. I wouldn't short AMC. Don't do that. There's better fish to catch than that with less risk. Okay, let's talk about earnings. Earnings this week. They begin in earnest on Tuesday. This is big bank week, folks. J.P. Morgan Chase, Goldman, coming out in the pre-market on the 13th. Then on Wednesday, more money center banks, Bank of America, Wells Fargo, Citigroup, BlackRock. Somebody mentioned Delta earlier. Delta reports on the 14th. Thursday, Taiwan Semiconductor. This is a potential trade for us. Morgan Stanley, potential trade for us. Because our goal is, we want to, let's do a hypothetical. If we want to trade Goldman Sachs, they report in the morning, so therefore we need to open up the trade on Monday evening and hopefully be out of that trade by Tuesday afternoon and into a new trade, could be even Delta Airlines, Wednesday, then by Thursday out of Delta Airlines into Taiwan Semi. So Alcoa comes out as well this coming week. What else? So it's going to be a very, very busy week for us. Friday, usually much doesn't happen on Fridays. Yeah, not much at all. All right, economic data. Nothing for tomorrow. Probably some Fed heads out there. Tuesday, the 13th, NFIB Small Business Index. That can move the small caps very easily. Consumer Price Index, that's the CPI, measure of inflation, manipulated, government numbers. This is exactly what they want you to hear. The federal budget, there hasn't been a budget in years that's had any type of credibility. Forget about that. This used to matter many, many moons ago. The PPI comes out on Wednesday. Fed's Beige Book on Wednesday as well. But really, economic data during earnings season takes a back seat. Nobody really pays attention to it. Everybody's focused on the headlines coming out of the corporations. Pay attention to revenues, reported revenues, forget about earnings, reported revenues, and forward-looking guidance. All you're going to hear going into this new trading week is that money managers or the talking heads on CNBC are expecting, they want you to listen to this number, a 60% increase in earnings. You probably say, wow, my God, that's the greatest thing since sliced bread. But remember what they're judging that 60% off of. Year ago comparisons. What was the economy doing a year ago? Nothing. It was dead. So it's not that hard to increase your profits by 60%. But take a look at where the stock market's been over the past year. Here. This is the stock market. Up dramatically. So the question that needs to be asked is that if we don't get great forward-looking guidance out of these corporations, is that 60% earnings growth priced into the market? Think about it. I'm not saying it is. We don't know yet. We soon will. Thursday, initial jobless claims. They came in hotter than expected last week. Empire State Manufacturing Index, Philly Fed Index, retail sales on Friday. Consumer sentiment. Wow, a lot of economic data coming out this week. And Friday, not much in terms of earnings reports. So we may get some some attention paid to data released on Friday on the economic front. And if I haven't said this already, if I can ask you folks to please smash that like button, it helps me out with the YouTube algorithm, I'd appreciate it. Thank you. Ricardo, always bullish on Bob and the contrarians. Thank you, sir. Eating grilled shrimp tonight. Old Bay and lemon. Lovely. Good for you. All right, let's do some chart requests. Hey, John. Hello. All right, let's get to it. Let's do some chart requests. SPCE, first one up. So I believe they launched today, right? Sir Richard went into space. Virgin extended, looking good on a monthly time frame though. Weekly chart. Rough beginning of the week. We finished okay. We closed off the highs of the session. I think we could do this. We could take our crayon out and say, you know what? 43.50 is support that needs to hold. Volume rose above average last week. Good to see. Daily chart. The daily chart shows that we have some automated trend lines here that we bounced off of last week. Here, this is the algorithm. Take them off, put them on. That's the computer doing the work for you. And we bounced off of it very, very nicely. I'd like to see a retest here. We may not get it. You never know if we're going to get a sell the news event tomorrow or not. What the heck? We'll create an alert. Okay, so we'll keep that active for a few days. Touch, bounce. Heck, let's find out if we break through it. Alert is set. We're good to go. Yeah, Jen, I don't disagree. I think that it may. KO. Communist Cola. All right. Coca-Cola. Monthly chart under pressure here. Again, the value of the automated trend lines, folks. Actually, what just happened here? Must have just refreshed. Oh, I didn't see this. All right, so last month we broke down. I didn't see this bar here. We are current flirting with a recapture of monthly support. So the monthly chart at current is looking favorable. Weekly chart. The weekly chart's looking good. We're bouncing off of some moving averages. We had an outside reversal bar last week. We engulfed the prior week's move. And in fact, we broke out on a weekly time frame out of a triangle formation. Daily chart. The chart looks good. The chart looks good. Despite the fact I banned the product from my home, but my wife ignores me. the chart looks good. Watch for a breakout above 54.53. That would mark a very healthy breakout. Let's move on to... Was that Randy I just saw? Hey, Randy, QCOM? QCM, I haven't watched this one in a while. Let's go to a monthly. Ooh, yeah, looking good. Great, great consolidation here. Nice W formation on RSI. We already have the breakout, or had the breakout. What are we doing, a retest now? Actually, it failed to hold. No big deal. This is just a consolidation. Weekly chart. A multi-month consolidation. I love those. So a nice retest of support last week. We had a good week the week before, but despite the fact that we were down last week, all down weeks are not the same. We've got to interpret what happened during the week. Did we rally off the lows? Is exactly what we did. Not only did we rally off the lows, we retested the breakout point. We had recaptured support the week of June the 21st, continuation breakout the following week, last week, retest breakout point. I think we're going up higher. Daily chart. Good day on Friday. Keep in mind that you're going to have resistance above. I'll give you a number in a moment of where that is. And that's a current 142.11 per share and declining. Now, if we break out and above that resistance level, these two, again, this is the algorithm working for you. These two resistance levels, one in blue, the other in red, are going to act as rising upper bands of resistance for the shares. So just keep them in mind that they're up there. So Qualcomm looking good. PHO. You got it. I like PHO. How you doing, Larry? Good to see you, man. This is looking awesome. One thing I will point out, though, RSI very overbought, but it could stay overbought. We have RSI monthly time frame at around just shy of 83. I think we're poised for liftoff here. We have a breakout monthly time frame, weekly chart. Really nice. We broke out above multiple resistance levels over the past couple of weeks. The week of the 28th, we broke above 4 of them. Then last week we retested all of them. They held, and we reversed to close positive on the week and at the highs of the week. You gotta love that. Daily chart. I think this could be bought. Good pick, Larry. Very good pick. ASTR. Not much data on monthly time frame. Very volatile. Let's go to a weekly chart. All right, so a bit of a reversal bar last week. We did close off the lows. This one's hard to read. I think we're going to drop into a trading range here. The low of the trading range is about $11.85. The highs of the trading range is about $14.50. Volume to the downside was high last week, signaling institutional distribution. Daily chart. I think you got to wait for a breakout here or a retrace back down to this support level. Then you can add another one up here. No sensitivity. All we care about is a close above. Do-do-do-do. And we'll keep it active for about 30 days. And we're good to go. I don't see a compelling need to get long right here, right now. You're at the top of a trading range with a resistance immediately above. I wouldn't buy here. I would look to buy on a retrace back down to support or a breakout above resistance. Hey, Pat, how you doing, brother? BNGO. Good looking chart. You know, this is one of those stocks which I would have analyzed months ago and said this was not going to end well, and it didn't end well. Support at $5.17 for giggles. Let's create an alert there. Now, the RSI is looking really good. And we're always looking for W formations, higher lows. And I think that's what's setting up here on RSI. And in fact, we've broken out on RSI, monthly time frame. So now we have an indicator leading price performance. Now we just need to see a follow through on price above resistance. Weekly chart. A down week last week, but we reversed off the lows of the week. Is the selling over? We don't know yet. We have our alert set here. Let's create an alert to let us know if we close on a breakout above weekly resistance. And we'll keep this active for 20 days. We're good to go. So right now, I would wait for one of my alerts to fire off. Daily chart. And we're right there. Here's where we have our alerts set, right at around $7 a share. We close on Friday at 675. So this is a chart that's definitely improving on all time frames, looking good. So BNGO, bullish. You're welcome, Abel. Anytime, man. Pat, Glop. Did they get hacked? Did I read something about them getting hacked? Or is that Glog? All right. Glop looking good. Monthly time frame. We're breaking out of a multi-month consolidation. Rising RSI looking really, really good. Clean breakout, higher highs, higher lows. Resistance at $5.39 weekly chart. RSI weekly time frame at 75. It can go higher. We closed out the week trading above the third standard deviation Bollinger Band. A little bit of a fade. I'd wait for the close above $5.40 to $5.50. Ideally, you get a 1 or 2 week consolidation to alleviate that overbought condition on the Bollinger Bands. Then it goes higher. Daily chart. A lot of congestion here at $5.40. I couldn't condone a buy here. I would wait for the breakout. But Glop looking good on a breakout. Tilray. Also looking good for a Bollinger Band squeeze here. Okay, just got to clean this up a little bit. Get rid of this. Good. Now we can do our work. So we have our higher low. I did not want to do that. Ooh. So we broke out, retraced back down to retest support. So far in the month, Tilray is trading down below monthly support. But the month is not over. A lot can happen between now and the end of the month. Plenty of time. Weekly chart. Yeah, rough week last week. You have a lot of lower highs and lower lows going on here. Downtrend channel. Price remains in the downtrend channel. We broke support. You know, what you may be seeing set up here is a higher low in a W formation. You know, for giggles, we'll throw up another line here to try to illustrate. Here's the left side of your W, right side potentially forming. But if we make a new weekly low and we undercut the lows of the week of May the 10th, we're going a lot lower. But maybe we're putting in a higher low here. So I would watch this week. The question that's got to be asked here, do we make a new weekly low? If we do, I would avoid. If it doesn't, start looking at it towards the end of the week as a potential long trade, and then set your alerts and watch for a breakout. And here, once we get above this pivot point at 2309, then that means your trend is over. Your downtrend is now turned into an uptrend. Daily chart. So no new daily low on Friday. Good to see. We held support. We just don't want to see a new weekly low on Tilray. So give it a little bit of time and space. No rush here. You're looking for a W formation, higher low, then a breakout. Wait until Thursday or Friday to see how it pans out. That's what I would do. Pat, what was that other one of yours? Lizzie. Okay, I had to clean all this up. Okay, better. Monthly chart. So we're seeing higher lows. Good to see. Always want to see that. We're in a trading range. Monthly time frame. Weekly chart. Last week was technically significant in that what we did is we retraced all the way back down to my manually drawn trend line and the algorithmic trend line in green. I'll take that off, put it back on, and you could see that it was a good week in that we held both support levels. So what I would do here, I'll create an alert at this support level, keep some sensitivity on there. Touch, bounce. So our alert is set on that retest of support. I would nibble there. Moving on to a daily chart. Nice reversal on Thursday. Continuation move up on Friday. RSI, hockey sticking up. Ideally, you get a pullback and a higher low on RSI. That'll give you the opportunity to buy on that pullback rather than chasing it on any move up higher. And once we begin to rally up and through the upper band of resistance, no sensitivity, break through, then you can add more. And we're good to go. Constructive on Lizzie. 6:45. I could take a couple more. LNG. Pat, you're on fire tonight, man. Cheniere Energy. The daily chart is looking awesome. Bollinger Band squeeze. We'll come back to that. Let's go to a monthly chart. No new monthly high yet. 90.25 resistance. Weekly chart. And you can see that the automated trend line, the algorithm, is picking up resistance in the same neighborhood as I put mine. So this line in red, Pat, is going to act as your rising upper band of resistance once we get past 90.25. Daily chart. And in fact, what you could do, set an alert at this resistance level. I know you have TrendSpider. Set an alert at that resistance level, and that'll tell you, if you're swing trading this, when to get out. If it's an investment, don't worry about it. And we're good to go. Daily chart. Looks good. Rising RSI. Stair-stepping higher. Exactly what you want to see. Here's a bunch of resistance levels above, Pat. But it looks as though it's probably going to go higher. Support at 85.90 per share. LNG looking strong. I think it goes higher, especially with nat gas ripping up higher. How much time do we have? 12 minutes. Eric, HOFV, is it a buy? Hall of Fame Resort and Entertainment. Never heard of it. It's consolidating on a monthly time frame nicely. There's not a lot of data here, but it looks as though this sell-off, excuse me, this sell-off is over. And now we're consolidating. And we're looking for a breakout. So here's support right at about $3 a share. Another support level to use it on a closing time frame. $3.62 per share. Let's drill down to a weekly view. Now you can see, here's the value of the automated trend lines. We had broken out, but then the week prior to last, we failed. That's a breakout point failure, or bull trap. So now what we need to do is create a new alert and buy on the breakout. Because we closed just shy of resistance last week. So I couldn't condone a buy right now. And if we do in fact continue to pull back here, create another alert down here, keep some sensitivity. And we'll keep that active for, I don't know, 25 days. Daily chart. Good price action on Friday. We gapped up through not one support level, or I should say resistance level, but two. We faded on the day, but that's okay. Watch $3.63 per share. You get a retest of that support level, and we close above it this week. I would impose the 3-day rule on HOFV. You've already got day one where we broke out. You want to see 2 more consecutive days of trade above, closing trade above $3.63. If it holds that, you could nibble, then add more as you begin to break out. We're running out of time here. All right, Mesa. Folks, can I ask you to smash that like button, please? Thank you very much. Mesa Air. Digging it. Looks good. Another example, it wasn't going to end well. It didn't end well. Now we've retraced back down to what, the 21 period moving average monthly time frame. Love that. So we create a support level there. RSI beginning to flatten out. Weekly chart. Good. We closed down on the week, but we did bounce off of support. Now, what you had formed here over the course of several weeks was support at $9.07 per share. Want to call it $9? Call it $9. But I would wait for a close above that mark. It's disappointing they didn't have enough rocket fuel to be able to close it back above $9 per share. Where did they close it? $8.88, so close. Daily chart. Now, technically, on Thursday, you had a breakout above one resistance level. Friday, above a second resistance level. Failed to hold a third. I'm not a big believer in V-shaped recoveries on stocks. I think you want to get a pullback and a higher low. Create an alert at one of these support levels. Wait for a retest. And that'll form your base from where the stock can break out from. I would stay very small for now. So I'm getting constructive on it. I still think we have a little bit of backing and filling to go on the shares. Then they'll probably move up higher. DNUT. Oh, Krispy Kreme, duh. I haven't seen this chart in a long time. What, did they relaunch under a different symbol? I don't know what to tell you about this. There's no data here. What's their story? What do they do? I wish I could tell you more here, McCarter. There's just not a lot of data. All right, so let's talk. Let's talk about what we can talk about. Capital preservation. This is a 4-hour chart. There's not enough data to use a daily chart. We'll probably be better off with a 2-hour chart. Let's change these properties here. It's on all time frames. Okay, good. Let's get rid of this. Folks, in a couple of minutes, we're going to circle back and take a look at the futures action to see if we've changed it all. All time frames. 4 hours in blue. Good. Good. All right, now we'll go to the 2-hour chart. Listen, if you break out above $20 a share, it looks like it's going to be a buy. If you break down below $17 a share, you're in trouble. And I'm dying to know what happened with Krispy Kreme. All right, so a lot of insider buying, $100 million. I'm not sure what kind of percentage of the float that represents. All right, let's. You're welcome, Eric. Let's circle back and take. I wish I could give you more on this, but the stock has traded for years. I'm not sure if this is a different symbol or not, but very strange. Strange. Okay. Let's go back to the futures action. Treasuries rising. Good for tech. Bad for the small caps. Small caps at resistance. Holding the breakout. Not much has changed here. NASDAQ 100. Again, not much has changed here. But it may... actually, that was not the... Hold on. Let's go back to... 10-year. All right, so they found a bottom. Bonds are beginning to flatten out, rise. That means yields are dropping or are flat on the session. Okay, now I understand better. Where's my S&Ps? Not much has changed since we went live. Let's check out the dollar. Dollar's faded off the highs. What does that mean for gold? Gold's still down on the session. Holding 1800, very, very critical. Let's check out natural gas, which I really like. Here's the weekly view of natural gas. I mean, really strong, pulling back, consolidating. We may pull back further and retest weekly support, but I think natural gas is going to be a buy later on in the week. Bitcoin ripping. Big gap up here, up over 2.5%. Remember, Bitcoin trades with CPI. They're very tightly correlated. What comes out this week? CPI. Oil, up over a 0.25 percentage point, looking good. With that, folks, thanks for joining in. Please smash that like button. Thanks for being here. I really appreciate you being here on a Sunday night. Have a profitable trading week. If you're not currently a member, join us. We'll be beginning earnings season and trading short strangles this week. Learn how to trade them. We post the actual trades and our strategy. So join us and have a great night. Be well.